Hi everyone. So today I'm with Dom, and we are going to be covering a new company called Bridger Aerospace. And this is going to be a stock analysis video. Dom's going to go right into it and start doing an earnings/analysis of the company.
All right, here we go. Getting my screen set up.
All right, perfect. Yeah, I can see it.
Perfect. So just a quick overview of what they do. So basically, they are an aerial firefighting and aerospace company. It's basically they're kind of like a private contractor for governments, federal and state, and their main goal is just to fight wildfires. They also help with any type of suppression for wildfires, and then they actually do fire or wildfire mapping. Another interesting thing to kind of help figure out where the fires would spread to and best plan where they should use their materials to kind of help reduce the risk of fire spreading and things like that. So definitely a more interesting company than we typically cover. So let's dive a little bit into their Q3 earnings. So Q3 earnings were overall good. There are a couple negative things which I'll go over. So let's kind of go down some of the highlights real quick. So the company passed its annual revenue guidance for the first 9 months of the year, achieving 114.3 million, which marks a 38% increase year over year. Another important thing is they did a $49 million sale lease buyback, lease back, and entered into a new $331 million expanded debt facility to give them more financial flexibility for future operations growth and fleet expansion. Um, Also wanted to mention that they did have an increase in wildfire incidents, as every year it feels like there's always more wildfires we start seeing on the news and things like this. But they did have a decrease in the amount of land burned in acres by 40% from the previous year. And so that does show kind of how effective they've been with keeping the fires contained and kind of reducing the costs on the states and potentially the federal government, depending on what the fire is, by keeping those managed well. The company's adjusted EBITDA grew to 49.1 million in Q3 from 47 million in Q3 of 2024, so up a couple million from the previous year, which is great to see. A couple of things, like I mentioned before, that aren't quite as nice to see, is that funding and things and revenue is a little bit uncertain in the short term, just because the government has been having issues with getting stuff passed budget-wise and things like that, and kind of allocating funds. Cost cutting has kind of been something the current administration is kind of trying to work toward, and so they're just trying to kind of weather that storm until they kind of figure out where the budget lays for the next upcoming year. And then I also wanted to mention that the costs kind of have been going up. Maintenance expenses are rising from 16.8 million the first 9 months of 2024 to 30.8 million. Obviously, cost or maintenance costs are always a huge concern because their main aspect is aerial fire suppression, and so costs will just always have to be a factor they have to consider as labor and parts and materials and stuff like that always go up over year. So that's kind of a little bit about them. Kind of let Matt take over now. I'll kind of go over more about the financial aspects of them right now and kind of talk about how they're doing financially.
Okay. Thank you, Dom. I appreciate it.
Yeah, no problem.
Okay, so like Dom was covering before, this company is definitely interesting from what we've covered in the past. And the thing is, because they're such a tiny company and they're very small, it's like $1.72 a share. I can't find any kind of DCF, any kind of really analyst coverage. So the closest I could get is to simply Wall Street explaining the DCF and explaining what they think is fair value. So right now, they think it's currently 95% undervalued. So it's currently at $1.73. Fair value is at $42.61. So 95% undervalued, 96% undervalued. So keep in mind that it is a speculative company, because the nature of the business, like Don was saying, that it's government, they get government contracts. So, sometimes the government doesn't have the money to fund them, or they just cancel the contracts, they lose that money, right? That's just the nature of how they go. So because they're so small, there's really no future growth that we see, but we could see the past performance here. And scrolling down a bit, we have the earnings and revenue. So we have their free cash flow the past couple of years, from 2020 negative 61 million, and now it is positive 24 million. So they've actually been doing very well in this sense. They've come a long way. So in that way, they've been doing well. So I wouldn't put them out too much. If we look at their financial health is a little bit shaky, I would say, for now. The debt is at least coming down since 2022 significantly, and you can see that the cash is rising up a little bit better to 55 million, but the debt's still higher than the equity and the cash, which is the position you really don't want to see at all. Now, just to have a look at their free cash flow as well to reinforce the idea, we have Yahoo Finance here, and before it was negative 47 million. Now it's positive 11 million. So since 2021 to now, they've had a great trajectory on the upside, which is fantastic to see. And every year they've been getting better and better, which is great. Now it's 24 million. This is for the year, so they're not. Yahoo Finance is a little bit slow to update sometimes, so keep in mind of that. Now, lastly, if we're going to check Tipranks, and Tipranks is going to actually have that it is a moderate buy. There is only two analysts that have covered this. And you have a low, so it's $1.73, 203% upside. You have $1.50 and $5.25. So you have a lowest price target of $5.25. I believe this. I guess this analyst reiterated it 2 days ago. So and Tipranks hasn't updated it, but yeah. I mean, earnings are pretty good, so we'll see. But again, this is a speculative company, and I wouldn't expect anything less than not a lot of analyst coverage. All right, Dom, is there anything else you want to add?
Not too much, just that it definitely is a higher risk, higher reward kind of thing. I
Yeah.
mean, obviously being such a cheap stock right now, like you can get quite a bit for not quite a bit of money. But at the end of the day, like we said, like it did have the high debt for a while. But it just kind of remains to be seen, especially with the government budgets, kind of like how they allocate those funds, because like we said, this is more or less a state and federal reliant company where they need the funds from governments to help fight the wildfires, be contracted to help do that.
Right.
So it's definitely something to consider.
Yeah, exactly. All right, thank you, Dom. Appreciate it.
Yep. Thank you.